The other additional topic for us to go over is credit repair. We've already talked about looking at your credit score as a tool that has more than the one use of getting you access to more credit at lower interest rates, weighing that tool through a business lens, running the numbers and seeing when a lower score might actually save you more money than a higher score would. And we've done a lot of work on letting go of the emotional and identity attachment that so many of us have to our credit scores so that we can make whatever choices we are going to make about getting out of debt, whether it's debt settlement or bankruptcy or paying it off in the long term from a place of knowledge and confidence and not from that place of fear just because our credit score may fall. Once you've accomplished all that, and once you've achieved the number one reason that I made this course, which is becoming debt-free and you're no longer sending 20, 30, 50% of your monthly income to credit cards paying mostly interest anymore, there may come a time down the road where you are interested in using the first tool that a credit score is to have more access to credit at a lower interest rate for purchases in your life. So let's talk a little bit about how to build that credit score back up at the other end of your debt settlement journey. Believe it or not, the first thing that's going to help your credit score out is going to happen automatically when you settle your account. I know that sounds a little strange. We talked a lot earlier about the reason why your credit score falls. Your credit score falls because your bank tells you you have to stop making monthly payments on your credit score in order to pursue debt settlement. And for all the months that you are pursuing debt settlement and negotiating a settlement with your bank, you are delinquent in your payments, and therefore your bank is reporting delinquencies to the credit bureaus, and that affects your FICO algorithm and makes your score drop. When you settle, your bank will now report to the credit bureaus not that you are delinquent, but that your account is closed, usually with an indication that it was settled for less than the amount owed. Now, while closed, settled for less than the amount owed will not reflect as positively in your FICO algorithm as a current account that is up to date with all payments, it does reflect better in the algorithm than delinquent. So upon settling your account, that gives your account a little bit of a bump just based on the notation of the account. The other thing that reflects positively on your credit score as soon as you settle an account is that because that account is now closed, that maxed out account is no longer pushing up your debt to total balance ratio. And as that ratio starts to ease because those maxed out accounts are closed, your score in the algorithm will see a little bump. So there's a couple of things that will rebound your credit score a little bit. I don't know how much, maybe 10%, maybe 15%. I couldn't say for sure right off the bat. So if your score dropped into the 550s, maybe it's going to be the high 500s or something, just because you've settled out all of your accounts. But you can't just trust your bank to make those reports. So while settling your accounts will boost your credit score a little bit, it will only happen if the bank actually reports it to the credit bureaus as such, as closed, settled for less than the amount owed. So now it falls upon you to check your credit score. And I don't mean just a simple check like one of those, little graphs with the number on it that your banking app may give you, or one of the easy websites that just shows you the score. You're going to have to actually sign up for one of these services, maybe through your bank, maybe through another website that will actually show you your credit report. You can do that for free. You are allowed by law to request your credit report once a year for free from each of the three major credit reporting bureaus, Equifax, TransUnion, and Experian. Their websites should tell you how to request those credit reports for free. If you can't find that on their website, their phone number will be there and you can call them and ask them to send you your credit report for free for that year. And when you get your credit report, you have to actually look at each account and make sure that the account has been noted properly. Now, it won't happen right away. So the day after sending payment, don't go ask for your credit report. Wait maybe 90 days, maybe 4 months. Give the bank a chance to catch up with their paperwork. While they're very motivated to call you often to collect on the debt, they're not so motivated to send the updated reporting to the credit bureau. So give it a little bit of time and then check your credit report and make sure that the notation is properly there. If it's not, you want to both send a letter to your bank saying, with the documentation as proof that you have in your payments file, your settlement agreement, and that the payments were made, that you want them to update your credit report to indicate that the account is closed, and you want to send the same information to the credit bureau, showing them the paperwork that says the account is closed. It will take a little bit of follow-up on your part, but by pursuing the credit bureaus and your bank to make sure that those notations are properly reflected on your credit report, that will ensure that you get that boost from settling your accounts. You also don't need to wait until all of your accounts are settled to do this. As each account is settled, wait a few months and then check your credit report. And when you settle the next one, which might be a few months later, wait a few months and check your credit report. Hopefully that's not going to be once a year for that free credit report. So there may come a time we have to sign up for a service that charges a monthly fee. Usually it's as little as $8.95 a month, $9.95 a month, maybe $12.95 a month to check your credit report as often as you want. You can sign up for a few months or for their free trial when you need it. Balance that out for yourself, but it would be worth those few extra dollars a month to check your credit report often and stay on top of that reporting as your accounts are settled to make sure that you get the bump in your credit score that will happen when they're all properly reported as closed. After that, maybe it's a year now after you've settled all of your accounts and your credit report reflects properly on its own for all of them, which would be great, or you've had to follow up on a couple of them to get it there, then just give it time. Part of the FICO algorithm accounts for the passage of time from bad debt. Remember, debt settlement doesn't have a restricted amount of time that it must stay on your credit report after you settle each debt, like bankruptcy, which will stay on your account for, I think it's 7 years. There's no legal regulation that says an account settled for less than the amount owed has to stay on your credit report for a certain amount of time. But over time, your score will start to rebound a little bit. It might be 2 years, 3 years, 4 years, having done nothing else, and you'll see your report start to go up again a little bit, even if you're not using credit. Another way, of course, is to take out credit cards. I'm not saying go do it. And sometimes after pursuing debt settlement, you may not see credit card offers for a little while, and when you do, they may be low, a $500 balance, a $1,000 balance. But if you use that $500 balance just for the tool of raising your credit score, not for getting back into debt, but just to charge a little bit and pay it off and charge a little bit and pay it off, that will also accelerate the rebound of your credit score. And then there are a couple of other things you can do to accelerate it a little faster. You can use a credit repair service. I am not an expert in credit repair services. I did use one 3 or 4 years after going through my entire debt settlement process. I hired a credit repair agency and learned a little bit about what they do, which I will share with you now. My understanding of the way most credit repair agencies or services work is that they bombard your banks with paperwork. They will have their in-house attorney send a letter to your bank asking for verification of many, many different things. Verification of the debt, verification of the payment, verification of what the report they made to the credit bureau was when the debt was settled. They'll look at your credit report to see where those proper notations are and where they aren't, and send all of those requests to the bank for backup paperwork. And for the most part, again, while banks are very motivated to keep calling you to get payment from you, most banks are not so motivated to follow up with all of this paperwork. It would cost them a lot of money to have somebody on hand at an annual salary just to respond to these types of requests from credit repair agencies. So what might happen is your bank does not respond to those requests at all. And after a certain amount of time, 60, 90, 180 days, the credit repair agency will then write to the credit bureau and say, the bank did not provide verification for the account to be noted in this way. Therefore, we want the account notation to come off, or we want the account to come off the credit report entirely. And without verification from the bank, the credit bureau does that. And what the credit repair agency is often able to do is have these old accounts that were delinquent, accounts that were settled for less than the amount owed, removed from your credit report. And when those accounts are removed from your credit report, the score goes up. It worked for me, and it wasn't very expensive. I think I paid $150 a month for 2 or 3 months for them to do this, and they were able to have several of my older closed accounts removed from my credit report, and I think it got back up into the mid 600s in a short amount of time. I didn't keep using them for some of the harder ones that might have taken much longer and cost more money. So I let it go with the credit repair agency at that time. And over a couple more years, those accounts fell off anyway. And by the time about 5 or 6 years had gone from my debt settlement journey, all of my old accounts were gone and my credit score was back up in the 700s. Can I say that's what's going to happen to you? No. I don't have 10 hours of videos to do on credit repair the way I have on debt settlement. It's all going to be different. So I highly recommend you talking to a credit repair agency when you get to that point about what the process is and what it might cost. I found value in it. You might also, but I also say it from this perspective. Do it as a tool. Do it as a business. If you want to repair your credit score because you want to use your credit score for the purposes that a credit score can be used for, getting more access to credit at lower interest rates. Maybe you are now looking to get a student loan for your child to go to college, or you are now looking to buy a house, or you financed a car a little while back based on the higher interest rate that came after debt settlement and you want to refinance at a lower interest rate now, or refinance the house that you already owned, or get a business loan, or maybe you're looking to get a new job or to move and need a higher credit score to show to landlords or prospective employers. If you're going to use the score as a tool, and it makes sense to spend some money to increase the sharpness of that tool, and it's a good business decision on the numbers, do it. If you're just doing it to make yourself feel better about a higher credit score, you probably know what I'd have to say about that.